I have chosen to go back to the basics, where it all started. I'm going back for those people. Maybe you have come across this channel after we have advanced so much, meeting us talking about so many kinds of investments. You might have joined the channel when all these get to connect with your personal finances. So, the first time, consider subscribing, turn on the notification bell so that you get notified anytime we get to post a new financial tip. So, personal finance is a topic that's why I'm always so confident when talking about it. Uh, Whether you think it affects you or you need to think about your personal finance, you'll just be lying to yourself if you think that you don't have to mind your finances. So that's why I'm a bit confident on investing that income. So that is all that entails personal finances. But for this particular session, I want us to talk about the investment arm of the personal finance docket. So I know you are the minister for personal finance in your own life. So I'm not putting any advice across. I'm just here to give information that might make your decisions making better, because best decisions are those decisions that are based on data. Best decisions are those decisions that are based with information. So let's focus on that arm of personal finance that we call head present. And I thought it was wise that I uses it as a template, but it's just a guide. So I believe I've gained a lot of knowledge since I prepared this template. So this is just a guide. So I'm not going to dwell so much on the little things that I have written on this template, because it has been a while since I made this template. So let's start by thinking about trying to define what is an investment. And I have, as I have indicated there, investment entails putting aside resources in products or assets where we get some resources. That is the first thing that we get from that point. And then you place those resources in a way that you'll be able to get some returns. So those are the two vital things that get to define or give meaning to the word investment. Number one, there must be some resources to be allocated, and then you must get. So anything that is not giving you return, it does not qualify to be called an investment. So I find a lot of discussion online, people trying to argue whether these passive investment avenues are investment or not, but that should not be the discussion. As far as something is giving you a return, personally, I would consider that to be an investment. And another important point there is that it is better to invest than just save. So there's a difference between savings and investing. Okay, you cannot invest before saving, because it is the resources that you have saved that now you put into an investment setup. So we are in 2025, the year of the Lord 2025, where the inflation rate is around 4.6%, as reported by the Central Bank of Kenya, as we ended the month of September. So anytime you save your money, anytime your money stays idle, just remember that there is an animal that is called inflation, that is eating up the value. Interest. Place your money in avenues where your money will be protected from this animal that we call inflation. So inflation currently is at 4.6%. And I would say that the main aim of investing, number one, doing the bare minimum is fighting inflation or protecting your money from inflation. So it is at 4.6%. So inflation being at 4.6% currently in Kenya, it means that the minimum returns that you should get from an investment is 4.6%. Because if you don't get a return that is above 4.6%, some some precious time, which is not in order. So the minimum from any investment currently in Kenya for it to be considered an investment is 4.6%, simply because that is the inflation rate. And the basic minimum that an investment should do for you is to help you fight inflation. So inflation enables us to get some returns and prevent loss of value via inflation. I've already mentioned that. Inflation is done through investment vehicles or instruments. So there are avenues that have been created in our financial system that helps you to invest, to place your money in a way that you'll be able to fight inflation. You'll be able to get some returns. So there are quite a number of investments. I know there is also investing in business, and I'm not going to go into that line simply because I'm not an expert in that line. But on this particular session, we are talking about passive investment avenues, investments that don't active participation, passive income. And it is good to note that majority of the passive income comes in using. So some of the instruments that you can use include fixed term deposits, treasury bills, treasury bonds, SACCOs, money market fund, stocks, and then shares. So we are going to go through these instruments one by one, just in a very short way. But you can always get videos where we have discussed them in depth on this same channel where we are. That is Finance Focus with Andrew. So we are going to go through these one by one so that you get a rough idea of where you can get to invest and get to of the investments that you can make. This is the basic. This is the one that is done by, I would not say people who are not informed, but it is people who are not so much informed. Now, fixed term deposits. This entails depositing a lump sum principal for a period of time at a fixed interest rate. So these are mainly offered by commercial bank, and I would say that the people that we allow to have their money in fixed deposits, you see, there's an age that comes, and you are not willing to accept any new information. And if you are still young, any other information. So you'll only be dealing with information that you already have. And it is at that point you will maybe consider having a fixed term deposit, because there is someone whom believe that all his money, all her money should be in a commercial bank. So if you try sell this person any other idea other than a commercial bank, you'll just be scamming them. So there are those groups of people whom believe that all their money, maybe they know is bank, all they know is bank. There is that his or her commercial bank that she has been banking with since the days of her youth, and that is the only place she knows that her money should be. So now, instead of their money being in a in a fixed account, in a savings account where they are earning zero interest, maybe they can consider putting a part fixed deposit account where they get a fixed interest rate for a particular period of time. Uh, the rate is determined by the particular bank and mainly depends on the amount and the period. They may be set minimum amounts. The interest and is subject to withholding tax. So there are some important things to notice that these fixed deposits varies from one bank to the other on the basis of interest rates, in the basis of minimum amount. And the interest rate, many of the times you'll find that the interest rate is dependent on the amount that you are investing or you are depositing and the time period. The more the amount, the better. The longer the period, the better. So you can just check with your commercial bank if this is something that you would consider, in case you lie in that category of people that believe that all their money should be in a commercial bank. So uh, that they give and the periods that they allow for deposit, and maybe it is something that you can consider. The other thing you need to note is that interest rate, interest earned, not interest rate, sorry. So interest earned from this avenue is subject to withholding tax. Currently, the withholding tax in Kenya is at 15%. So any interest that you earn from this avenue will be subject to a withholding tax to your bank, and they will be able to guide you on what. Let's mention something about SACCOs. We have moved from some small some system. They are also an investment avenue on their own. And I would say that SACCOs are organizations that provide financial services mainly by mobilization of funds and provision of cheap credit. SACCOs mainly focus on bringing together members that share a common social or financial background. The main two products provided by SACCOs are deposits account and share capital account. The benefits of joining SACCOs include promotion of savings, culture, investment returns, access to credit. Factors to consider before joining a SACCO includes regulation, dividend rates, accessibility, all that. Now, I would say that the basic purpose of a SACCO is access to cheap credit. That is the winning point that comes with SACCOs. I might be wrong, but I always say that if you don't have intentions of taking a loan in the near future, you have no business being in a SACCO. I know I might be right, I might be wrong, but that is my stand. If you don't intend taking a loan in the near future, you don't have any business being in a SACCO. So let's leave SACCOs for those. SACCO is access to cheap credit. So if you don't have the intention of taking a loan, you might not have any business being in a SACCO. Then you realize that SACCO mainly focuses on bringing together members of a common or you find that some SACCOs are associated with some institutions. To give an example, is the DT SACCO. So it was initially for those people who are in uniform, but later the membership was open to the public. The other one is there's this one for Kenya Power. So Steamer SACCO. So Steamer SACCO was initially for KPLC employees. Later opened the membership to the public. They are collecting people that have something in common. So ensure when you are joining a SACCO, you join a SACCO with people where you have common background and a common goal. So there are main two products in a SACCO. There are deposits accounts and share capital account. So one of the things that in the share capital is not refundable. Even if you are leaving the SACCO, also the deposit that you deposit in your SACCO account. It is very important that you get to know that that is not money that you can access anytime you think like accessing it. SACCOs does not provide you with liquidity, and that is a point that majority of people miss to understand before joining a SACCO. One of the things that SACCO lacks is liquidity. Like you can have deposits of 1 million shillings in a SACCO, and you need 500,000 out of that. And you cannot access it. You cannot access that money. You'll be told to get a loan. So SACCOs do not have liquidity. So as you join the back of your mind, the other thing that you need to note that despite the lack of liquidity, SACCOs still have some number of benefits. Number one is promotion of a saving culture, and how does a SACCO create a saving culture? There's that minimum amount that you should deposit in a SACCO monthly. So, and you must do it if you want to continue to be member of that particular SACCO. And then investment returns or returns for SACCOs comes in terms of dividends. Dividends is basically the distribution of profits that a SACCO makes at the end of the year to the members. They will declare a dividend rate at which they will pay members SACCO based on their dividends. The other benefits I have already said about it is access to credit. SACCOs are one of the most uh, are the most known institutions that give access to cheap credit. Then there are some factors that you need to consider before joining a SACCO. So if you are contemplating to join a SACCO, I know we have thousands of SACCOs in this country. So you don't just join a SACCO because it have the name SACCO on it. You don't join a SACCO because they have a building where they have an office. There are some factors that you need to consider. Factor number one, or the bare minimum that you can do before you join any financial institution and money, is regulation. There is a governmental organization known as SASRA. That is the body that is in charge of regulating SASRA website and ensure that the circle that you want to join is regulated by SASRA. And if it is not regulated by SASRA, don't move an inch past that. That is a circle that you should never join. So, number one, regulation. Number two, of course, it is the dividend rates. We are human beings, and when it comes to returns, the more the better. I know everyone wants better returns. So you can prefer joining a circle that gives better dividends. So in your search for a circle to join, after you have confirmed about the regulation, because that is the basic. Consider the dividend that they have been paying in the past, maybe the last 3 years, and even though we say that when it comes to investments, past performance is not a guarantee of future performance, but that it is that past performance that should tell you how the organization or how the institution has been performing, and you can be able to predict in the last 3 years and try to predict how they will perform next year. So the other thing that you need to we are living right now, maybe accessibility for a circle would mean previously would mean that circle that has so many branches, that circle that has branches all over the country. But in this era, yes, don't join that circle that is only found in one village without water and electricity. That is where they started. That is where they have a single branch. In a very tiny branch, uko central, uko mlima, a village that does not have water and electricity. Don't join that circle that has no accessibility. But again, in 2025, accessibility goes beyond the physical presence. That is the access to the branches. But get that circle that have a digital footprint where you can be able to access the circle services digitally. On your phone, you can be able to check your balance, you can be able to deposit electronically, you can get your electronic statements that you really need to go to the circle physically. So for 2025, for me, accessibility meaning where you know people, because especially if you want to get a loan, and we said that if you don't intend to take a loan, you might not have any business, you might not have much things to do in a circle. At the point of applying for a loan, they will ask for people that we call guarantors. So these are people who are coming to say that in case this guy does not pay, we will pay on his or her behalf. That is what guarantorship means. If you don't know people in that particular circle, consider joining a circle. Consider joining a circle. You can guarantee each other when it my page on circles. In case you have any question, drop. Everyone was talking about money market funds. Everyone had a money market fund. I think someone came and presented money market fund as this cash cow where you get rich by night. But unfortunately, that is not the case because this is a financial product where funds are collected from different investors to form a big pool of funds. The funds are then invested in different instruments, and returns are redistributed back to the investors. So, money market funds is one of the investment under an umbrella that we call collective investment schemes, where fund managers that are majorly insurance companies and some banks and some investment bank collect money from different investors. They invest in different avenues, get some profit, give redistribute back the profits to the investors from whom they collected fund. So I will give the information as it is without fear of bank account. It will just do better than that money that is lying idle in your bank account. That than that it will do better than that money that is